And in business news, the federal government says its compressed natural gas initiative has attracted more than $175 million investment from the private sector. This is according to the special advisor to the president on energy, this Olu Verijain, at the ongoing 18th OTL Africa Downstream Energy Week in Lagos. The special advisor, represented by a technical advisor on energy, said the federal government launched the presidential CNG initiative specifically to create a CNG ecosystem capable of achieving Nigeria's objective of transiting to cleaner transportation fuels and easing the impact of the removal of fuels. So 36 states and the Federal Capital Territory collectively generated 2.43 trillion naira as internally generated revenue in 2023. This is contained in the Bureau's report on internally generated revenues at state levels for 2023. The report said 2023 IGR grew by 26.03% when compared to 1.93 trillion naira recorded in 2022. According to the NBS, the 2023 IGR had two major revenue sources: taxes and ministries, departments and agencies revenue. The Bureau says the taxes subcategory recorded in the period are the pay-as-you-earn, direct assessment, road taxes, stamp duties, capital gain tax, withholding taxes. Other taxes and LGAs revenues. According to the report, the leading states of the IGR in 2023 were Lagos, FCT and Rivers, with 815.86 billion naira, 211.1 billion naira and 195.4 billion naira respectively, while the least three performing states are Taraba, Yobe and Kebbi, valued at 10.87 billion naira, 11.19 billion naira and 11.74 billion naira respectively. The Nigerian Association of Small-Scale Industrialists has challenged business owners to take advantage of the federal government's 75 billion naira MSME intervention funds to unlock the potential of their businesses. Speaking while briefing the media on the MOU signed with the Bank of Industries on the disbursement of the funds in Abuja, the national president described the fund as a beacon of hope for countless MSMEs struggling to access affordable credit. Helen Osamide Akins has the report.
In January, the federal government, in partnership with the Bank of Industry, announced the disbursement of a 75 billion naira fund to support MSMEs nationwide. This initiative was formalized in October when the Bank of Industry signed a memorandum of understanding with NASI to oversee fund disbursement to small-scale businesses across Nigeria. At a recent media briefing, NASI outlined the loan terms, encouraging its members to utilize this financial opportunity to grow their businesses.
The fund will provide technical assistance and capacity building program to help MSME improve their businesses practice and enhance their competitiveness.
So this is a 75 billion naira fund, and we expect to reach at least 75,000 enterprises. Directly and indirectly, we expect to reach even more. All businesses in Nigeria can apply across all business sectors. Applicants are allowed to apply for loans of up to 1 million naira. Repayments will also be monthly, and all businesses that have been disbursed to will be given repayment schedules.
Different schemes have different collateral requirements or security requirements. But this particular scheme, because it's intervention, it's a rescue scheme. The rescue scheme has 9% interest rate, 3 years duration, and no collateral requirements.
They emphasized the need for the government to expand this loan program to reach more beneficiaries.
The last statistic of the MSMEs was about 40 million. So this is just like a tip of the iceberg. So I expect that if he can put, let's look at a number ratio of 3 trillion for 30 million MSMEs. I'm telling you, the economy is going to burst.
NASI's ongoing mission is to integrate Nigeria's informal sector into the mainstream economy through capacity building initiatives, training and sector development. Beyond providing opportunities for MSMEs to expand their business, if well managed and coordinated, it will also help in a long way to revamp the nation's economy. Helen Osamide Akins, TVC News, Abuja.
Well, Asian stocks were broadly mixed in a volatile trading today as investors greeded for 3 days of tech megacap earnings reports on Wall Street, kicking off with Google pairing Alphabet later in the day. The Nikkei ended the day up 0.77%, building on the 1.82% rally in the previous session. It started the day down 0.21%. Hong Kong Hang Seng was 0.5% higher, pairing earlier gains of 1.6%. Mainland and Chinese blue chips slipped 0.75%, reversing on the early rise of 0.68%. Chinese investors are focused on the top leadership meeting next week for more details of Beijing stimulus measures. U.S. S&P 500 futures were flat after the cash index gained 0.26% overnight. Now, France and Morocco reached agreements totaling up to 10 billion euros during President Macron's 3-day visit aimed at improving strained relationship between the two nations. Now, the deal covers issues around economic investment in energy and infrastructure. According to the agreement, French rail manufacturer Alstom will give up to 18 high rail train cars to Morocco. Moroccan Phosphate Office and energy company Engo will seal an agreement with potential investment of about 3.5 billion euros. President Macron's visit is at the invitation of Moroccan King Mohammed V, and who is coming months after Macron altered France's long-standing stance and supported Morocco's autonomy plan for the disputed Western Sahara. And we'll take you to oil prices now to wrap up this bulletin. Now, crude oil prices remained mixed today as the prices stay on point. We start with the West Texas Intermediate crude. In the previous section, the U.S. also plans to buy oil from its strategic petroleum reserves, which provided some support to wider concerns about weaker future and the demand growth exerted pressure. Now, U.S. West Texas Intermediate crude sells at $67.71 with an upward price margin of 0.49%. Brent also experienced an uptick of 0.46% to sell at $71.75 per barrel. Bonnie Light sells for $78.62 with a decline of 2.84%. And for the OPEC basket, crude oil dealers are offering $73.81 with a downward price review of 1.19%.